So the last thing, obviously, is market making principles. So market making principles are simply like time of day. When is there an intraday influence? When do things that normally occur like market protraction, like Judas swings? Let's go back to understanding the market structure and the shifts quarterly. Okay. If you are looking for a way to systematically reduce everything down to a nuts and bolts, this is how I do things. This is how I follow this process. I'm not going to do anything outside of these rule-based ideas. This is what you are trying to do. You want to do this with your trading plan. Between April, May, down into June, you really want to be focusing on going short stock indices. The bigger moves, the cleaner moves are going to be on the sell side. Going long in the fall, going into they call it the Santa Claus rally, the Christmas rally. The market tends to create a little bit of a flurry run up higher going into the close of December. Now, with all the things going on in the world today, that's probably an invitation for it to not pan out this year. And if it does, don't let it be a discouragement, because I want you to go back through as many years as you got data to go back and look at it, and you'll see it's there. It's there. It repeats, it repeats, it repeats. Okay. So doesn't it make sense for you to be focusing on one side of the marketplace where there's the tendency for it to move in greater magnitude, one direction, and lean only in that direction for your bias and narrative ideas for taking trades? Right away, you have filtered 80% of the bullshit that most traders fall victim to. You're not going to push it hard in the summertime because it's the doldrums. Now, there's opportunities to do that, but you're not going to be pushing your highest leverage. You don't want to do that because there's a likelihood of it becoming choppy and messy. So time of day, you want to be focusing on, if you're, say you're in the sell model, in the spring highs that go down to the summer doldrum lows, leading into the fall months low that starts to rally up into the close of the year. During the spring fall time period, I shouldn't say it like that. In the spring declining or sell model, where it's likely to go lower on the daily chart and continuously drop lower, if you look at time of day, you can start studying and see that the London Open between 2 o'clock and 4 o'clock in the morning Eastern Standard Time, you will have a 70% likelihood of seeing the high of the day form. What will it look like? It will look just like that fucking model I gave for free on YouTube. You're going to wait for some buy side liquidity to be taken. Then there's a shift in market structure. Wait for the fair value gap to form. Sell short in the fair value gap. Hold it minimum. Hold it minimum to New York Open. And then see if New York gives you a continuation where you can go in and maybe pyramid. That's a goal for you to do. Not go out there and start doing it right now. It's just something you grow into. That's where you have to have a model right now you work on. But what is your end objective? What are you really trying to do as a trader? I want to sell short the highs in the London session, or buy long the lows in the London session and hold for the daily range. That's day trading. If you're doing anything less than holding for the daily range, you are intraday scalping. That's it. Now you can break that down into session swing trading, where you're swinging the entire New York session or the London session and getting out before 5 o'clock in the morning Eastern time. There's nothing wrong with that if that's your model, if that's what you want to do. And you don't want to do anything else because time of day and schedule, school, business, your family life, you just don't want to be in front of the charts a lot of times. You can make a career just by doing session only. 2 o'clock in the morning to 5 o'clock in the morning, there's your 3 hours. That's it, you're done. Or work the 8:30 to 11 o'clock morning session in equities and be done. Don't trade the afternoon. Or trade 1:30 to 4 as your PM session. If that's what you want to be doing, and that's the time that fits your window of opportunity, then there it is. The question's going to be, what can I do, ICT, if I can't do any of them? I don't know personally. Like, I don't know how to answer that, because I don't fuck with Asia. It's very far and few between opportunities that form in Asia that I like. I just don't like it. Doesn't mean you can't find an opportunity there. I just don't have I don't have the confidence as a mentor to say you should do that. Okay. You want to be in the highest order flow volume that's coming into the marketplace, which is London and New York session, and in the afternoon session too in New York. So those three time periods are kind of like your three, the three best times of when you want to be trading and why you should be doing it. So if you're using the time of day idea coupled with that sell model in the spring months, going down in the summer months in stock indices, the ranges will be gravitating going lower. Not every single candle in the daily chart is going to be a down close. And that's another thing that neophytes do. They come in here, they think every candle is going to be a down close. But I thought it was, the bearish bias was going to, you have to have other things, folks. And market profiles. Now, before I get any further with this one, I am not talking about market profile, where they do the little volume histogram, on its side axis, and they look for, point of control and all that stuff. That to me, no offense, Corpse, that's bullshit stuff to me. Like, I don't think there's any reason for anybody to do that stuff. But if you're making money with it, God bless you. I'm not here to detract or say anybody that's making money with it can't make money with it going forward. I'm just saying I don't personally subscribe to that, and I already know what your volume profile shit's going to say to you before you see it. So market profiles, I have weekly profiles that I use, and I use daily profiles. So what is that? I'm looking at the tendency for the market to do certain types of delivery. It'll make the high of the day in London and then go in consolidation the rest of the day in the New York session. Or there'll be a classic sell day where it'll run up, create the high of the day in London, and then sell off all day long and go close somewhere close to the low of the day. Or a classic buy day where it creates the low of the day in London and then rallies all throughout the day and then closes near the high of that particular day. There's seek and destroy, where it's a day that looks like a really good trading opportunity, and all of a sudden it hands you your ass. It starts chopping back and forth. As soon as you even think it's a seek and destroy day, you stop trading, turn the charts off, walk away. I have blown accounts in bonds. I have blown accounts in S&P, and I've blown accounts in Forex, getting caught in seek and destroy days, pushing it, thinking I'm going to be able to come out of what I was doing and making it worse. So one of the best things you can do is, in all of your studying, really put focus on days where you see it going higher high, lower low, higher high, lower low, higher high, lower low, and then all of a sudden, later in the day, it takes off and just blows out one other range, and that's seek and destroy. Like, nobody's allowed to be making money in that day. That's hard. It's demoralizing when you fall victim to it, and I've done it. And unfortunately, there are times where I don't know when it's going to creep in, but here's how you know when it's likely to. It's going to be right before a big like FOMC day. It's going to be before a rate announcement type thing, some kind of high impact news driver where the market participants are going to get cleaned out. And why would that happen? Think about why that would take place. Why would you expect it to happen? Because traders are going to do what? They're going to take a position before the report, or whenever that big volatility news driver is going to hit the marketplace and create these big CPI runs, or like we saw in non-farm payroll yesterday, where it was one-sidedness and it was a big 60 handle move drop right just like that in 1 minute. There are people out there that want to participate in that, and they subscribe to their opinion, and they want to get in the day before. Well, I admire their their courage. It's rewarded with pain, because this is exactly why that seek and destroy profile will manifest itself, because that report is anticipating, or in the minds of traders with that report, they're all anticipating a big move, and everybody has an opinion. A lot of people are going to have a bullish opinion. A lot of people are going to have a bearish opinion. So for good measure, the algorithm does what? It takes the initial short-term little intraday high out, brings people in on breakouts going long, and then it goes down and takes out a short-term low, knocking out their stop loss that went long and tripping in new traders going short with a breakout strategy. Then it goes back up to that short-term high it just formed and cleans that out. So now Those that went short from up there and were lucky, now they're out of the marketplace. And it keeps doing that same thing all day long. Every high is taken out, every low is taken out. That's seek and destroy. Nobody gets to participate in that move. And as soon as you recognize that happen or that happening in the marketplace, maybe you forgot about the economic calendar. Maybe you didn't pay attention to what's likely to occur tomorrow. That is when seek and destroy is likely to occur. Or it can happen intraday before the FOMC. This is why I tell my students, don't trade FOMC, because you're likely to get caught up into a seek and destroy day before the 2 o'clock rate announcement comes out, and then there it goes one direction, and you wait for it, because FOMC is always a two-stage event. There's the initial move that's usually fake, and the real move is the opposite direction. So these are conversations that are just too fucking good for a book. Okay, they're just too good for a book. And I know these people that like to take my shit and rebrand it and all. They're going to take this stuff and they're going to include it in a little Amazon real quick books and shit. And they're not going to credit me, but you've heard me here talk about it. And it's in my mentorship stuff too. But market profiles are little templates that I have, in my own personal study, identified what the general characteristics look like and how that weekly profile should look. When is the weekly low likely to form? When is the weekly high likely to form? What is the overall characteristic of that weekly range going to look like if we were looking at it over, like, say, a 15-minute chart or an hourly chart? What would that perspective look like if we turn it into a line chart? And I spent a lot of time as a younger man trying to come up with ways like that. And what inspired me was Larry Williams had an idea that was trading day of the month. Okay. And what he had was this little, every month he had the S&P broken down and the bond market broken down. And man, I'm telling you what, like, there were times where it was like spot on. It was like a seasonal tendency for those individual two markets that were showing you like critical key turning days. And if it was like, the fifth trading day of the month, it would create a high and then it would sell off for this many days. Man, I shit you not. This shit was like, I repped that shit like crazy. And my older folks that were with me when I was on America Online, Gate Trader, who is the guy that won in 2000 the stock division on Robbins Cup, the 24% return, which was respectful back then. Gate Trader was one of my original students when I was on America Online, and there's another guy, Chansome, okay, guy up in Alaska. He actually just I think he made his way into my last mentorship group. Him and his son are going through it together, but they know that I was repping that shit back then, and I was fascinated with it, and I thought that it was like next level shit. So I said, okay, well, I don't know how he did that shit. He said he crunched numbers and ran all the, what the market did for this many years, and he came out with that output. And I did see it fail sometimes. I mean, when it failed, it was, like anything else. But when it was on, it was so good. It was very similar to what I just outlined here for the yearly range. Okay, so I gave you the entire map for every single year. Why do you teach that you got to be under your wing for a year, Michael? Michael, tell me why I got to subscribe to your bullshit for a full year to learn how to trade. I just told you in this video or this discussion right now. Because if you don't see it and you're not walked through it with a hand holding, which is what I did in my private mentorship, you can't see it. You won't appreciate how it is consistent. And this is the reason why when I gave my analysis in private mentorship, it's 90% accurate. It's logged and ain't a fucking person can say anything about it because it's all been witnessed. It's all there. It's recorded. It's live. It's there all before it happened. And I used the things I'm talking about right here. So I went from using his idea that he was building these little like seasonal tendencies for each individual month to, okay, I want to know what does the weekly range look like on average. And I knew I wouldn't get one that matches everything because everything's going to look different. But I want to reduce it down to what type of weekly range would it look like and what tends to repeat a lot. And those templates is what I share in my core content. Now, the problem is students that see those things, they want me to be able to say, this is what that template's going to be this week. When I need Monday's trading, And then I want to see what Tuesday's doing. So it's a matter of knowing what's occurring right then and there. Like I got to be in it. Like I gotta be in there trading it. Now there are other times where if you're in those seasonal times, like in the spring to summer months where it's likely to go lower, I'm many times able to say, okay, because of the economic calendar, the way the economic calendar is, and there's a lot of impact news on Wednesday or Thursday. Well, what does that mean? Look at your templates in that core content. Which one has a higher low forming on that Wednesday or Thursday template? And that's the weekly template you're going to be following probably for that week. That's it. I just gave it to you. And if it doesn't pan out, you just eat it. It's a loss, like anything else. It's a cost of doing business. But you're going to find that it's almost like fucking fortune telling. It's weird. It's weird how it just pans out. But it takes a lot of courage to see that and experience. You're not going to be able to just look at it and say, "Oh, I figured this out. It's going to be so easy." That you got to do this. This is a lifestyle, and you'll learn. And then I went to studying how I can do this on an intraday basis. So I had intraday templates or market profiles or little tendencies for the market to do certain little patterns and delivery of price. I put it in that type of format too. And you see that in the day trading portion of the core content. So I'm looking at days with the expectation it's going to deliver a certain way. Now, I'm not saying I'm 100% right. I'm not even claiming to be 90% right in that regard. But I know if I fall victim to a intraday profile that I'm trying to trade, if it fails, I know which one it's going to go to if I fail there. And it's a matter of experience and knowing how to navigate that. But narrative is knowing how it's going to use one of those templates. And that's what makes this complicated. And it's easy for people to say, fuck this, it's too hard. He makes it complicated. No. If you want laser guided precision, it's going to take some fucking effort and it's going to put some wrinkles on you. Okay. It's going to gray some of your hair. That's just what I require because that's the way I'm wired. I want something that's next fucking level outside the reach of the common person or trader. That's why when you see me executing, that shit is next to flawless. And you can't get those results with this retail horseshit renamed. It doesn't exist anywhere else. It does not exist. And these fucking jokers that say, oh, it's supply and demand. It's not supply and demand. The things I'm teaching you are highly specific. They're very specific. It's not an open range that you fucking figure out where you're going to be buying or selling at. Here's your zone. Where are you buying in that zone? Sam don't even teach you that. Sidon. So that logic, while in its infancy, is better than support and resistance, but it's still lacking. And you have to be precise about why are you buying here? And if you don't know where you're buying and why you're buying it, how the fuck can you put your stop loss in an effective place and know that it ain't going to get hit? Look at the trade examples I show you. You see, oh, he's got a $3,000 stop loss there. Whew, that's a lot. Look at the profit target. It's always more than three. Always more than three times. Sometimes more than that. Sometimes five. Sometimes 10. Don't get caught up with the numbers. Look at the logic I'm showing you. Why I'm putting my stop loss where I'm putting it. It's exactly how I teach it. The algorithm's going to respect that. You see, oh man, he's putting a stop loss right there. I couldn't do that because you haven't been doing this long enough and you haven't adopted what? The experience of seeing it. I've handled this stuff for 30 years. I've I've been in it for 3 decades. I've seen this shit pan out so many times. I know how to trust it. And if I lose at it, it's not a big deal. I know that it will repeat again. And if I took a loss, I can get that back easily. It's easy. Losing is hard for a neophyte. It's it's impossible to get through a losing set of trades as a new student. You need encouragement. You need to be able to be around other people to say, hey, look, I've been there too. And that's one of the benefits of being in a community like this, because I don't want you all to simply saying, here's where I made money. High five, ICT. That's cool. A lot of people like to see that. I like seeing it. It fluffs my ego. I ain't going to lie to you. It feels good to see my students doing well. But I also really want to see folks share where they're fucking up, what they're doing wrong. Because not only will it be an opportunity for you to get me replying to you saying, you did this incorrectly and you should have been focusing on that. You'll learn from it and other people will learn from that. But you're all afraid to show what I opened this whole presentation out with. You don't want to show your weaknesses. You don't show where you've done it wrong. And that's where the learning occurs. You don't learn anything when you did it right. That's sugar coated. That's candy coated bullshit. You're not going to constantly win. You're going to lose. You're going to lose money. You're going to do it wrong. And how are you going to take that? Are you going to lose your shit and lose your mind about it? Oh, man, I got to go back in right away and do it. Why? I'll talk about that in a moment. You need to know your model and your market and stop trying to chase whatever the fuck I'm doing. If I'm trying to do something in the marketplace and you have a model already arrived at and a particular market that you want to trade in, you can see nobody's been able to convince me to trade in crypto. I'm never going to touch it. I'm never going to touch that shit. But you all watch me have an exodus from Forex, and I've given you all the reasons why I have no interest in going back in, because I know shit's coming and I don't want to be wrecked in that. I don't want to be caught up in some deep pegging bullshit. I don't want to be in that at all. And you can take that risk on if you want to. I'm not talking you out of it. I'm not telling you to stay in it. It's a matter of personal choice. My trust is in stock indices. I went there first. When I started finding consistency, I found it there. That's where I found it. Okay. As a commodity trader in 1993. Any consistency started its formation in that year in stock indices and bonds. That was it. And I was trying to find mega trades in corn and wheat and live cattle and pork bellies and crude oil and gold, all those copper, cotton, coffee, sugar. And I never touched orange juice again. once it spanked my ass, it took 50% of the option premium in one night. Was it? I was like, yeah, fuck orange juice. You know, I there for a while. I didn't want to drink it. I was so mad about it, but I don't drink it today because it's too acidic. But and they put shit in it now. I don't want to be drinking, but it's another discussion for another day. But you need to know your model and your market, and you want to be back testing. Okay, at least the minimum of 3 months with tape reading interwoven in that. You know, optimally you want to do it at least for 6 months. So you can split it up with the first 3 months of back testing, no tape reading, all hindsight, going back and looking at old data, logging it and seeing where the patterns form, what it looked like, how much risk would have been incurred, how many times it would have failed, how many times it would have panned out, where your potential entries would be pyramided if you want to do pyramid. Some of you might not want a pyramid. That's fine. There's nothing wrong with it. Don't let me, because I do it, inspire you to feel like you have to do that. You might be just one entry and go to first partial or second partial, and or go to full target. But don't go to full target when you're first learning. You're going to frustrate yourself because you're going to be doing it wrong. You'll be entering too soon, entering too late, or entering incorrectly, and you're going to try to hold on to something for a full target. This is why, I'm just going to fucking say it. Tom Dante, he's always talked about me in his little private little circles. Never had the balls to say anything publicly. And he would always say, it doesn't make any sense to take partials because you incur the initial risk. And then as you take something off, you're not getting paid for the initial risk. I don't give a fuck about that initial risk. Once it starts paying me, I want to get fucking paid. I'm taking something out of the trade. And that logic to me is absolutely asinine. You are in this to make money. You're not in here to say, here, I got a trophy. It went to my target. It's going to my target many times, but I don't need it to go to my fucking target. I'm rolling that account up. I'm parlaying that account up. And I'm quickly removing all that leverage that I have tied up in that trade. I can do something else while I'm scaling out. You don't see that shit. That's how I ran these fucking small accounts up. That's how I did it. But you want to listen to these fucking clowns that don't trade, they don't do shit on there. They make these little squilly fucking lines and poor ass jokes. These people don't make fucking money. They don't make money. They don't fucking have consistency. But they hate fucking people like me. And I fucking love it. I love it. So back test for 3 months minimum, and or 6 months of back testing with tape reading. That means when you're tape reading, you're literally sitting in front of the charts, watching live data print on the charts, but you're not taking the entries. You're not even pushing a demo account. You're doing it for experience reading the price watching how it reacts. And then what you're doing is you're seeing, say, for instance, you're watching the S&P, okay? And you think it's going to go down to a particular level. You know you're drawing liquidity. You know it's likely to go lower. You're waiting for the fair value gap to form, and you want to watch and see how it gravitates up into it. How does it react? Does it immediately deliver after it goes into a fair value gap? Does it hang around a little bit and then start moving in your favor? Does it go down and then come back up to it one more time and tap into it, which is the reason why I don't teach trailing your stop loss aggressively, because that's a tendency in the marketplace. The algorithm can come back and touch that fair value gap one more time. And that's a normal thing. You don't see that shit in books. It's just, well, you got stopped out and, maybe you can take another trade. Fuck that. I'm going to go right back in that market. If I get stopped out and everything's true, I'm going to use that retouch of a fair value gap later on that I've already entered on, because I know they can be reclaimed, recycled, reused, if you will, because they are real support and resistance. You talking about support and resistance is a joke in your mind community. It isn't if you're using the fair value gap, because you can literally use fair value gaps as points of inversion where once they go through it, then it should act as well. If you're looking at a fair value gap that you thought was going to be bearish and it trades through it, shows no respect to it, when that bitch comes back down and touches that again on the buy side, I expect a trade there. If everything is equal, and I know I was wrong on my short idea, and it's shown me I'm absolutely wrong, I'm going to buy that fair value gap that I would have been using for a short. Isn't that support and resistance theory? Yes. But the problem is that idea of support and resistance, you don't know what fucking high or low to put it on. Look at everybody on Twitter. Look at everybody on TradingView, on YouTube that uses trend lines. How the fuck did they arrive at those trend lines? And how many times is it really respecting it? They'll draw it after it's happened. Oh, look at this. This is where it touched. No, draw that fucking line before the market comes down and touches it and reacts. I don't see that ever. I don't ever see that. I'm always looking for it, but I never see that shit. But how many times have you seen me and my fucking students recording our entries in management, and it's beautifully respecting the fucking things that we're doing to the fucking level right there? Bang. Laser guided precision. Poor Goldman Sachs boys. So you got initially, right away, going into anything with me, you got a minimum of 6 months of never pushing a button, because you need to know how you're going to react to seeing price. Are you going to be palms sweaty and anxious about it? And you're not even in a demo, because you want to be right. And you're going to see how removing the idea of being right or wrong, take the game aspect out of it, because that's bullshit, because this is not a fucking game. It's not a fucking video game. This will wreck your fucking ass. It'll ruin your shit if you don't know what you're doing. So you got to respect this risk. And I'll talk a little bit about that in a moment. But you want to be listening to your internal dialogue of what you think you see in the charts. And then you want to write that down and screenshot it as you're doing it. And you're tape reading, you're not just simply watching price. When you think you see something, you screen capture that. And you quickly put an annotation in there, what you think. You don't have time to be fully automating the narrative in a text format. You're literally just trying to encapsulate that moment, what you thought you saw, and then there it is. So the way you could do this is pre-type on TradingView or whatever platform you're using, fair value gap bearish, fair value gap bullish, draw on liquidity, and stop loss, first partial, have those already on your chart. And then when it's doing what you think it is, drag that little text over there. You see me typing it out because I'm proving that I'm doing this live. Okay, everybody bitches about, oh, it's a cherry pick. Bullshit. Dude, I'm doing it right next to these other guys that are doing live streaming. I'm not going to live stream. I'm not going to do that. I cannot do that and think clearly about what I'm doing. But there's no denying that what I'm doing is I can only be typing and annotating and managing a stop on one chart. In TradingView, if you're working with whether it be demo or your live account, you can only do one account. They're not letting you run two. It's the same fucking account. So all that shit goes out the window when you really take a step back and say, okay, no, this shit's really happening. It's really happening. Yes. And you won't even worry about that nonsense if you start doing the things I'm talking about. Go look at old data, study it, get your back data stuff, how many times it's formed, when it failed, And what does that look like? I'm absolutely going to do that for you in 2023. When we come back together again in February, I know it doesn't seem like I even went away yet, has it? Anyway, in February, I'm going to start off with doing the very things I'm talking about right here. I'm going to show you how to literally go into back testing. How I'm going to literally sit down and back test. I don't know how long I'm going to do it, but I'm going to show you exactly what it is that you're doing, why you're doing it, what you're supposed to be doing. And then we're going to be doing live tape reading the rest of the fucking year. That means I'm going to pull out points in the marketplace where I want you to study. I'm going to show you where I think the draw on liquidity is. And I want you to listen because I'm going to prompt you. I'm not going to say this is a short. I'm not going to say this is a buy. I'm going to say, what do you see right now? You're going to know based on that model in 2022 that's on YouTube right now. It ain't going to change. It's not going to manifest into another form of it. Okay. It's not going to mutate and have 15 other things added to it. I'm just simply going to say, what do you see right now? I'm not going to be on Twitter looking for responses. I'm not going to be looking at the chat room ever because I know there's going to be horseshit in there. I don't give a fuck because they're going to see consistency next year. They're going to see it and they're going to choke on it. But you're going to learn from it. You're going to benefit from it. You're going to see exactly what this algorithm does, when it's supposed to do it, why it's supposed to do it, and then how consistent you can be in knowing where it's going to go. Because that's that crutch that many of you need. And that's what my private mentorship had. They had that crutch of my experience of saying, this is where it's going to go on the daily chart, and it's going to reach for these levels on the intraday. So they had that going in. All they had to do is use what they learned in mentorship. They learned that model. I didn't spell it out just like that, but I've actually used that model many times in my examples. So it's not like I created just for that. The whole process of outlining it was for my daughter to say, okay, here's what you can do. This is what I think you can do. And she's not interested in trading. So you got 6 months of back testing and tape reading. After 6 months, okay, then you go into a minimum of 3 months of demo trading. Now, I personally say 6 months of consistency. If you think for a fucking second that you are ready to go with a live account before at least what I've said here and expect consistency, you're going to be frustrated. You're going to blow your account. You don't even know yourself. You're going to ruin yourself. And you're going to be a statistic. You're going to be an ICT statistic where, the people that rush through it and try to do it quicker, they fail and they think the shit don't work because of that. Anybody else's stuff, when they rush to go through it, there it is. It's failure. Well, it's you. It's you. You're trying to do it too fast. And you haven't seen a full year. You haven't appreciated the level of consistency and the ideas as the market dynamics I've outlined here. They happen all the time, folks. How do you think I'm finding all these examples all the time? I mean, think about it. Okay, if it's so easy to cherry pick it, I want to see somebody else do it. Cherry pick it. Do it. You can do both sides of the marketplace. Record one trade going one way and one trade going the other way, but it better be fucking precise entries like mine. And it better hit targets, and you better be moving a stop loss that entered the time when you put it in there. Don't be putting the 24 contracts or 40 contracts on a simulator account where it ain't even being recorded and say you made $45,000. That shit don't fucking float. Okay. So 3 months minimum demo, minimum. And I'm suggesting you should do 6. Because if you are 6 months consistently following the rules and the model in the only markets you're going to be trading, but ICT, which one am I going to trade? Do I trade the ES? Do I trade the NASDAQ? Do I trade the US 100? Do I trade the US 500, the US 30, or the Dow? Which one do I trade? Whatever one you settle on. Don't let me influence that. You already know which market you want to trade. You're just looking for me to co-sign it or somebody else that might be making money consistently. That's what it is. Everybody wants to see, what are you trading? Synthetic indices. I don't know anything about that shit. I don't know if my stuff works. I don't even know what that is. But I have a lot of African folks that will ask me that, and I don't know what that is. Or do you trade the volatility index? I don't fucking trade that. No way. You see what I trade. I'm trading ES or NASDAQ. That's it. That's it. It's a simple, small little universe. If I had to trade just one, ES. And I would never, ever, ever need to do anything else ever again. I wouldn't have to look at any other charts ever. Just ES. All I got to do is look at it in the springtime and see when there's a divergence to set me up the sell model, and I look for it in the fall to be a buy model, and that's it. I don't need to look at anything else because everything else is going to be in that chart for ES or whatever market you're trying to follow. But if you want to have ridiculous insight and you want to have the prowess that you see me demonstrated and you see my students demonstrating in their examples, they're out there recording themselves doing it. They're on their own little YouTube channels in their own little lane doing their own thing. And I'm not telling them to get in those trades. And man, that fucking feels amazing. It feels amazing seeing them able to do that. Like I love showing my sons. I show my wife, look at this guy. Look what he just did there. Look, and then when I share my examples, I'm recording. You don't know what I'm doing. You don't know what I'm doing. You don't know what trades I'm taking. And then I put it up there, and then everybody comes behind me. Look at this. I took the same trade, and they recorded their same shit. There's no fucking way you can go back in time. Record all that compressed data, all that delivery and price, annotations, all the bullshit. There's no way that can be faked. That means there was a transfer of knowledge from me to them. That's proof of concept. That is proof the shit works. And it means if they can do it, you can fucking do it. And don't let no fucking clown anywhere tell you you can't, because I'm telling you, you can. You absolutely can. I have made this obtainable for all of you. Yes, it takes work. Everything does. Every fucking thing takes work and effort. It's going to be a hard press for some of you. It's going to be easier for others. And you have to find out what it's going to be for you. But you just simply got to dig your heels in. Dig your heels in and say, fuck it. I'm going to put up with whatever I got to put up with. I already know it's going to be hard because if it ain't rough, it ain't right. That's just the way it is. Because if it was easy, everybody could do it. And you don't see that. You don't see it. So you have a full, complete year if you do it right, optimally. 6 months of back testing and tape reading, and then 3 to 6 months of consistently aiming for a demo results or a track record, if you want to go so far as to say that, for 6 months that are consistently profitable. Then and only then are you prepared mentally, emotionally, to even consider, and I'm not saying that you should do it, but then is when you should consider putting real money in. And that's a decision you're going to make. There's no ICT lesson that says, okay, this is the deciding factor. This is when ICT says I should do it. No, you are going to make that decision. Some of you may never do it. You may be too scared, and that's fine. That means you can't do it. But if you're good in demo, you can run signal services and you make money doing that. I got students that are doing it. They're not even in a live account. They can't take the personal risk on themselves. That's their weakness. So what they've done is, okay, I'm good in a demo, but I can't do well when it's money because I take the losing trades and it affects me mentally. Okay, well, why don't you just run a signal service? Because if you're confident in your demo and you know it's not going to hurt you, there's no kryptonite there. And if you're consistent, there it is. And they're running that. There it is. I mean, is there anything wrong with that in my opinion? Fuck no. No, because if the people that are subscribing to someone like that, they already know if it's going to work, they're going to keep subscribing. If it doesn't work, they're not going to subscribe and continue. So everybody's getting what they're looking for. There's a lot of people out there that can't trade. They can't trade. They can't do the pushing of the button. They can't absorb the uncertainty that is inherent in this industry. And there's a lot of uncertainty. And it stems internally. Because if you can take yourself out of the equation, all you're doing is looking for a market that's going to go up or go down. And where's it going to go up to, or where's it going to go down to? And where's the market at right now? Has it created an imbalance? Has it taken stops? That's the questions you're asking. But see, what you do, and I did when I was younger, I bring all our horse shit to it. Wife left me. I don't feel well. I'm not able to bench press this much. My friends are doing better than me in their job. Fucking Carl's got the market spot again this month. Everything's going to be a plague and a distraction. And you're going to bring all that nonsense into your decision making, and you're going to clutter up this whole thing. And I personally think that subconsciously, I think we as humans like to do that because it provides us a perfect excuse why we fail. Oh, of course we're going to fail. I have all these other things to contend with. No, you didn't. You brought that shit into trading. You got to find a way to be able to remove all that outward influence, these outward factors that will plague anybody. Doesn't matter if you have a high aptitude in terms of intelligence, or if you're just a common person like I was when I came into this. I mean, I'm not an intellectual giant. I'm not superior in my intellect. I'm a blue collar guy. Like I'm straight out of freaking Middle River, Maryland. I mean, I'm like that is the definition of blue collar. They called our neighborhood Cardboard City. Literally, it doesn't exist anymore. They built new. I think it was Ryan Homes or Ryland Homes. I think they put those over there, right across the street from Middle River School. My address as a kid was 30 Henderson, and it was literally right across the street from Middle River. But you got to find a way to keep that stuff from coming in. You can't invite it. We're about halfway there, folks. Hope you packed the fucking lunch. Know and respect the risk. Okay, and now obviously that's the part everybody wants to ignore. Well, I just want to win. Just show me how to win. I don't want to know about a stop loss. I know I should use a stop loss ICT, but I don't know where to fucking put it, so I'm not going to use it. And then when you blow your account or you go in severe drawdown, what do you feel then? Weigh out that right now. Okay. If you haven't even started pushing a button yet, weigh out the the pressure of fearful of knowing where to put a stop loss versus not using a stop loss and regretting it and how bad it can be before you either get out or they margin call you. Which one do you want to suffer through? Obviously, you want to flounder in the beginning of learning where to put a stop loss. And that's the benefit of giving yourself time. Folks, that stuff is a complicated thing. You can't just simply say, here's the rules, because I've already done that. I've already shown you where to put a stop loss. The fair value gap, where's the high of the fair value gap? Okay. If you allow yourself in terms of the risk to have it to the swing high behind the high that forms the fair value gap, I'm going